Hello, ladies and gentlemen. Welcome to Educate to Trade's first podcast of the year. It's been a while, and that's because I have been off. I've been lazy and I've been relaxing too hard over the Christmas period, and now I'm back to work and also on a diet. How about you, Chris?
Yeah, busy time, pretty flat out at my end as well. The start of the year, not lazy, but tiring starts of the year. My year's going to start on Tuesday next week. Decided. Okay. We've got Martin Luther King Day coming on Monday, so you don't want to start then. But yeah, after I've been trading a little bit. I'll show you one of the things I was in today. But yeah, I think
maybe you could coincide it with Chinese New Year. Maybe that's the way.
Maybe I can do it with the 4th of July.
Wow, that is a very late start to the year.
That's it.
Okay, so what's been going on in the world of trading? And
yeah, the most topical one, the most up-to-date one is Goldman Sachs earnings. These are the biggest, is the biggest company by weight in the Dow Jones. Not the biggest bank in America, actually. That's JP Morgan. They reported back on Tuesday. I'll go have a look at the chart on Tuesday from the open on the Dow Jones. In fact, I can show you. Why ask you to do it when I can do it for you? You saw these earnings come out on Tuesday, and then Tuesday. What's the wrong button? Here we go. From 2:30, and we got absolute massive washout as JP Morgan's chart looked very similar to this after the open. Bit of a mess on the data, but very, very clear and clean and of high magnitude after the news. So hopefully we see something similar. We managed to catch some of the long here. There was the monthly point of control that it rejected up at these levels on my chart, so I managed to get out pretty nicely. But story doesn't look great, right? There were beats, but it's not all about the numbers. It's about guidance and what we think is happening going forwards. But bear in mind, of course, that the Goldman stock has been on an absolute mammoth tear as well throughout the last month and a half. So maybe profit taking, but if we still see some continuation in this sell-off into the open, maybe we could be looking down on the Dow Jones a little bit today. But to me, I rarely trade the Dow Jones. I'm very much in terms of indices an ES or an S&P and a NASDAQ trader. There's not a lot of volume on the Dow by comparison, but I make an exception for earnings days. It's looking that certainly from the gammas that the ranges are very narrow on the S&P today, so that's a reason why I would probably go look at gold on a normal day when that's happening. But today, because we do have life and stimulus in the Dow Jones, I think it could be an excellent day for trading that asset.
Just got to change one setting.
All right. We're back with a bang. So yeah, that's my look at it today, just to kind of crack a little bit more on that S&P. The range is about 30 points from including the first, second, and third largest gamma spots. So I'm not too keen on that right now, and maybe we can talk about option expiry later. But now I have Russell back. What's been on your mind?
Yeah, so just really considering this whole Venezuelan kind of what would you call it? Colonization?
Yeah, I think it's empire building, is it? Yeah, we're back to the old empire days. Well, we're not. Our days have been and gone. But yeah, America wants some.
Really kind of just wondering what that means for gold, what that means for the dollar, what that means for oil. Yeah, moving forward into this year. I mean, we all thought we was going to be sort of steady for a nice passage year, but Trump has really started it with a bang.
I think I may have helped curse that by saying he can't be as crazy in 2026 as he was going to be in 2025, and lo and behold, before I even get to my desk on that first day, we are cooking.
Well, it's midterms, so normally presidents and midterms kind of play it safe, right? But
normal presidents might. Not this guy.
No, definitely not. Yeah, so what I've been hearing on the grapevine is there could be some great investment opportunities with this situation going on. Obviously, Venezuela has one of the largest oil deposits.
The largest proven reserves.
Yeah, in the world.
But not a big supplier to the global market, which is why oil price itself hasn't moved much. But reserves, oh my.
Yeah, and the reason why is because their infrastructure is outdated. So Trump is now saying that he is going to put a lot of money into actually getting that infrastructure back up. experts say 10 years. He wants it done in 18 months. Typical Trump move.
He's not into experts, though. Eh?
No, definitely not. Yeah, so I mean, so what we could be looking at here is great investment opportunities in the companies that will be doing the infrastructure there. And obviously there's a lot of rare earth minerals there as well, large deposits of that. So we could be looking into certain mining companies because, as you know, and as we've seen pretty much all year last year, is even though demand is slowly decreasing, supply is massively increasing. And now with this coming online as well, there is going to be even more supply.
Well, coming online, we're away from that, but yeah, potentially, in his 18 months or more likely 10 years, there's going to be a bit of a time lag on it. But yeah, more supply. But as we know, there's going to be a lot of energy demand with all this AI infrastructure going forwards. I think you raised an interesting point about the politics of it all. The rare earths have always been kind of ring-fenced by China, right? They seem to be the people who have the deposits and are prepared to do the dirty work to get the deposits.
Exactly.
And obviously, China versus the US is the kind of modern Cold War almost. It's kind of sizzling away a little bit or simmering away in the background. And if that comes to pass, and we need some of these rare earths for the US's military capabilities, which is what a lot of it's used for, or at least some of it's going to be used for in those advanced technologies, then they're going to need to be able to get it from someone other than their adversary. So to have something close by that China can't get in the way of, they can't blockade, right, unless they get through the Panama Canal, it's going to be tricky for them to get in the way of that. Very close, located geographically to the US. There's a lot of benefits to getting hold of it. Strategically, obviously from a morality perspective, maybe there are some question marks to be raised, and maybe this does start to kind of put a real knife through NATO and what has been the foundations of the US's success over the past 60 years.
Well, I think you had a good point, because China can and have just turn off the plug for rare earth minerals at any point. So this kind of would actually take that power away from them.
Yep.
And let's be honest, I mean, looking at China's economy now, it's not doing as well as they previously thought it would. So politically, this could be a good move for the USA and, dare say, the rest of the world as well.
Yeah. It doesn't come without its risk, though, right? If they, because now obviously the Greenland story is also coming. They want to kind of take that not for the minerals, just as a defense point for the Russians coming under the Arctic ice to come at the North America that way. They want to strategically take hold of that. That's obviously Danish property.
Yep.
And I think troops from Denmark, Germany are all over there now, kind of bolstering things. And it just feels like this is a bit of a divide in kind of modern Western culture between Europe and the US. And don't forget, you mentioned the Chinese economy being struggling a little bit, and obviously it's nowhere near as large as the US. Well, the Eurozone is as large as the US.
Yes.
Right. So, I know we're a bit of a basket case here in Europe in many ways, but we have the infrastructure, the size to potentially do something. But I think together the US and Europe collaborating is obviously way more powerful than if we're fighting in our own corners. Yeah,
I mean, so moving back to the oil, obviously Venezuela has large amounts of crude oil, which is not like, the nice oil. It's going to need a lot of infrastructure.
The heavy stuff.
Yeah. Now, mostly the USA gets that at the moment from Canada. But Venezuela being positioned probably in a better part, I think Canada's up there. It's going to be cheaper to transport from Venezuela. And so it makes you wonder what's going to happen to the oil production in Canada moving forward. If you were Canadian, if you were an oil refinery in Canada, would you be worrying round about now?
Yeah, maybe you'd have an eye on things, wouldn't you? I mean, whether this gets to go through, because I think, you mentioned that they're going to need to invest a lot of money in the infrastructure to get it going. Can they do that? Well, they can do it, but does it make sense to do it? Chevron, one of the biggest oil companies in the US, said no thank you. We do not want any part of this, because they could quite easily, as has happened before, invest tons of money into Venezuela, all for it to be expropriated back, and lo and behold, your investment is up the Swanee.
But I'm guessing,
or down it, more likely.
I'm guessing there will be some companies that do choose to do that. So, I mean, it would be interesting to see how their share prices do.
Yeah, I'd expect it to be volatile. Like, there's going to be a lot of risk premium in there, but there is huge potential.
Yeah, over the next couple of years, yeah.
Does it make sense for someone like Chevron to step in and take that on when they're already such a behemoth with the risk that would be associated with it and the financial cost? Maybe they couldn't justify it to all their shareholders. But these smaller entities that are a little bit more mobile, yeah, these guys perhaps might be the ones that might want to take it on.
Which kind of brings us to probably the question that 90% of traders want to know is
how to stop the drawdown.
no, is where does this leave gold? Because, you know, the dollar, I mean, maybe we could have a look at the dollar and see how it's performing, because there is basically a de-dollarization going on, right?
This is a tale as old as time, the death of the US dollar. Oh my. Yeah. And it has struggled. When did Trump come in? End of 2024. He was elected inaugurated in Jan. Been a pretty straight line down, 10%-ish declines to lows. Now we're flip-flopping, mainly below the 100 round number here. Hasn't been a bad couple of weeks actually for the dollar, but the de-dollarization story is one, right? If these BRICS nations are starting to trade commodities that they do so much with one another without using the dollar as an intermediary, maybe we'll get this bipartisan kind of BRICS currency versus US dollar currency. And obviously this is one of the problems that Venezuela ran into, right? They were they were taking payments in yuan, and yeah, Trump didn't like it.
Which obviously is only good news for gold, right?
Yeah, bad news for the dollar, good news for gold.
And silver?
Yeah, silver's on an absolute ripper at the moment.
Yeah. It's $80 the last time I looked, right?
Well, I haven't seen it today, but I imagine it's maybe popped its nose through that. So we've been, it was up at 70 odd at the start of the year.
This is gold, yeah.
Now we're looking at gold, just popping to new highs this week. Look at the silver, and it's difficult to take the silver futures too seriously. But yeah, we were up at $93.
Wow. That's really gone.
I remember when I was trading silver, when I first started trading silver back in 2006. The previous historical high had been up in the 1980s, around $50. This one not quite showing that height. But the inflation adjusted number at that point was like 125. This is the story we were telling all our clients. This could get to 125, 125. Now inflationary adjust that, it's probably more likely 250. So we're a long way from inflation adjusted highs, but my God, I mean, what a move. What an unbelievable move in the market that is.
So I know we talked about this in a older podcast, about there's not actually, so silver is a byproduct, right, from mining. And there's not enough money in silver to actually go and physically mine it. All the silver mines are closed.
At some point.
I'm thinking, you know, looking at this, at what point do these silver mines start to open again?
Yeah. And but then if they do, maybe the oversupply makes it a very short enterprise for these places. Yeah, I mean, at some point there's a price at which they'll open. Right? I can't tell you what that is. I'm not sure where that is. But there is certainly a price where that can happen.
That's probably above our pay grade, right?
Yeah, I mean, probably would have known this a few years ago, but I couldn't tell you how much it costs now to get silver out of the ground. Yeah, I think there's only 1 or 2 dedicated silver mines in the world. So yeah, if this does the same thing as it did last year, maybe there'll be some questions about this. But
well, we do actually have a question coming in from TikTok here, and they are asking what drives gold prices and silver prices. I feel like we kind of said a few things there, but what are the main underpinnings?
Yeah, long term, it's deemed to be an inflation hedge. Yeah. Certainly gold, if you look at gold, historically an ounce of gold could buy you in Roman times a toga and a leather belt and some leather sandals. These days an ounce of gold, well, even a year ago, you could buy a fairly nice suit, a nice pair of shoes, a nice belt. These days you might be able to get a couple, right? But it is an inflation hedge. It holds its value over time. Yeah, TM Lewin can sort you out with 10 of them.
Where do you buy your suits from?
Well,
£2,000 a suit?
I don't wear suits anymore. That's one of the benefits of being a trader these days. So that was one of the main views, is the inflation hedge. Now, there's a weird contradiction here, because when inflation goes up, then what happens to interest rates? They go up.
Yep.
And inverse correlation to interest rates is also a big story within gold. So in the shorter term, higher interest rates, certainly from the US, mean a stronger dollar. the inverse correlation between gold and the dollar is one of the cornerstones of why one of the reasons it's done so well in recent times. The other reason, if we go back to early 2025, goodness me, oh, this is silver, so let's go to gold. Drag the chart if it's still showing. Yeah, we have huge buying out of China. As part of this potential de-dollarization story, if they want to create a more robust currency, it makes sense to hold physical reserves of an asset. Obviously, the US proportionately are a huge holder of of gold, and China wanted to do some catching up. And this was kind of the more buyers than sellers, central bank buying en masse, that led to the beginning of this rally. And quite frankly, you could see it day to day that a lot of the moves were happening from 1 in the morning till 4 in the morning, and we'd come to our desk and gold was up $60. You know, this was happening time and time again. So supply and demand, you know, it's true of everything. But main drivers of gold, I would say, in the short term, you want to look at the dollar inverse correlation. Obviously, it's a fear index as well, right? In a way, so if you have any geopolitical events that really escalate, gold typically does pretty well on those, as we saw with Venezuela. In fact, if we look back on a daily chart, you can see the gap up that we got on that Friday. Here we go, on the 2nd of Jan, and then the Venezuela issues over that weekend, and pop, we're up $100, and we haven't looked back. So these geopolitical problems are also another catalyst for it. So where is the lack of catalyst? Well, if the dollar were to break through that 100, that would probably take a bit of the froth out. I mean, I'm super bullish gold, but in times of higher inflation, and if we are entering structural inflation, I know Jamie Dimon's been back again saying that he thinks inflation is coming this year as a result of the tariffs. It's just been a long feed through. If inflation is going to be persistent, then, and we're in one of those strong inflation environments, gold typically is a great asset, but it's also a very volatile asset. So these sort of like massive 5% down days that we had, and these big, 100, and maybe at some point it could do $1,000 retrace. You know, it could still go and post highs beyond that. So I think this is going to be a hell of a market to trade. Maybe if you're new to it, you might want to start with the micro contracts on the futures. Just size it well, because the volatility in this asset is unlike what we used to see. Hopefully it sticks around.
Yeah, that's fair enough. So we've had some news releases this week, pretty unimpressive. CPI, and maybe we can have a little look at those and a little debrief on.
I didn't quite get the calendar up, but let's have a look. Where are we on the CPIs? Yeah, slight miss on the month-on-month. Okay, I mean, we saw stock markets pop, and maybe we can talk about this now. Actually, the initial move that we had in the S&P. In fact, if I go to, in fact, this one runs through, does it? This one is a live one. No, it only does the opens. Okay, so if we go to the SPX 500, stick away from the futures. Let's pick one of this bad boy. We go back to Tuesday. Lower CPI. Interest rates don't need to stay up. No, do they? Up we went for 5 minutes into this 7,000 max pain level on the option. So option expiry is tomorrow. This happened at 1:30. It has not happened if you look at the SPX SIBO contract, the real cash contract. This 7,000 level has not traded in the live session, right? We got to those highs. Oh my, where am I? We got to those highs on Tuesday, not at 7,000. We were 15 points shy of it. So I feel like there is still a chance that we get up here. I mean, we're running out of time to do this between now and around kind of 26 hours from now when the options roll over. But this 7,000 level hasn't been tagged. I feel like it might want to be, but with option expiries, it's an interesting one. But just to see that differential on the data, it took it there. Yeah, the CPI, and then the unwind was
because you use options flow data in your everyday. I mean, you don't trade options, but you use it to trade other assets by. Well, it's called options flow data, isn't it? Yeah. Reading where the option puts and calls are, and
more even than the open interest, it's more about the gamma exposure of the dealers, like where they get squeezed and where they need to hedge to.
Yeah.
And this can kind of take you to, it's like a magnet, right? It can take you to these levels, and it can also respond from these levels, whether you're in positive or negative gamma on the long term. So yeah, I use this stuff every day. I wouldn't be comfortable trading the S&P without it.
Yeah, because these big institutions they use options to kind of it's like an insurance policy for them, isn't it? If there's like pullbacks and stuff like that, at least they'll make money on the options as well. And then if it all goes their way, then they're quits in, right?
Well, this is it. If you are hedged, and if the market is very well hedged, any bad news that comes, the market won't sell off that much because no one's panicking because everyone's covered with their puts or whatever expression they have on their option trades. So it's like you say, it's an insurance policy. Now imagine not having an insurance policy and your house going on fire. Well, now you're in a forced liquidation environment, okay? This is where markets can get really, really scary and move very quickly. So it kind of pins markets a little bit. And you can see where everyone, well, not everyone, but you can see where JP Morgan put their trades every month. The 7,000 level is one of theirs, for sure. You can tell where these guys are, or where the market's likely to go to based on the aggregate of all the options that are in play.
Yeah.
So yeah, I love using it, and given that we are at option expiry, these are often turning points that we often see. Go have a look at loads of them in 2023. We had some earlier this year, last year. COVID was an incredible example of this. So maybe all the bad news around Venezuela, potential breakdown in NATO with Greenland, Powell getting banged up, being indicted, and the breakdown and the lack of independence for the Fed, all of these little things, the markets really haven't sold off too badly since then.
No.
But maybe it takes for the options to expire, for the insurance to go away in order to let that follow through. So watching potential rollovers next week with interest, albeit not on Monday because we're not trading.
Well, is it bank holiday?
Yeah, they love a bank holiday in the US. Yeah,
there's a lot of them. Isn't there?
Yeah, we'll be here, but not for long. Yeah, Martin Luther King Day. What else is on your radar?
1 second. There's a question here. By inflation, is that primarily in the US and globally, like we had in COVID, or other economics too? So, by inflation, is that the primary in the US?
Maybe primarily in the US.
Yeah. Globally, or globally.
Typically, you're not going to get high inflation in the US, all things being equal, without getting it a little bit in Europe and the UK and what have you. The Western economies all tend to experience these things at the same time. There are some exceptions. Look at Japan. They didn't really get that inflation push at that point. But everyone else in the Western world seemed to. So I don't think it's just a US story necessarily. But that might change if we do get a little bit more diverged from the US economy with any breakdowns in relationships around NATO. Maybe our economies will function slightly differently to one another. But in the meantime, all things being equal, I don't think you get inflation spiking in the US like we saw in 2022 without having a similar sort of spike in the UK or elsewhere.
Right. Did you want to go over the Goldman Sachs today? Or
showed them that a little bit already. Yeah. I was saying that I think the Dow is going to be a really good asset to trade today. Talking about the option data, the ranges are very narrow, so I'm avoiding trading the S&P today when it went up without real clarity on where it can go. If you can break above them all and start challenging up towards this 7,000, maybe I can be interested. But I think the Dow Jones is going to be much easier to trade.
Fair enough.
Albeit very volatile. So if you're used to trading the Dow Jones, maybe use some slightly wider stops because you will be able to get bigger targets.
Okay, so what news have we got coming up next week? What's there? Obviously nothing on Monday, but let's have a look at the calendar moving forward.
Next week, oh, wrong one. Here we go. Next week, Canadian data, inflation. We got UK jobs data. We're getting close to Fed blackout periods as well. The Fed's on the 28th. So not next Wednesday, the Wednesday afterwards. So we'll stop hearing from those Fed members now, or at least by next week.
But they're going to cut, right?
No, they're pausing.
Oh, they are pausing.
Yeah, well, it's 96% priced in that they're going to pause now. It was 82 last week. And surprisingly, post-inflation data, it actually went the other way. You'd expect maybe with that inflation data being slightly meeker than expected, you might be able to get that rate cut. No, that's not what the markets are pricing in. Mainly through the rhetoric, I think, and the fact that we were only pricing in one cut for the whole year when we were in December. That we're not getting it yet isn't too much of a surprise. Perhaps Trump didn't do himself any favors by trying to bang up the chairman. And he goes, you know what? You can stick your rate cut where the sun don't shine.
Yeah, I mean, they definitely have history, don't they?
They do.
That's for sure.
Yeah, more inflation data. PCE, Fed love this one. And Friday, BOJ rate decision. So we're starting to get the rate decisions coming through, and we'll have a good couple of weeks of those ahead. PMIs to follow. So a little bit of life this time of the cycle. Yeah, Monday, Martin Luther King Day. I think the stock markets and bond markets are closed. Certainly the banks are closed. I've read the bond market and stock markets are closed. Don't expect much.
No? Okay, fair enough. How are the bonds holding up with all of this madness going on?
Yeah, we've had some auctions this week. Funnily enough, I haven't actually looked at these, so I'm pleased you asked. If you look at the ZMs.
This is the 10-year.
So here we go. So we had the 10-year, where was this? The 30-year auction was Tuesday. And the 10-year was normally before, maybe it was afterwards. Can't see it on the calendar here. Sure there was a 10-year. Oh, here we go. We've got a 10-year bond auction. That's the UK. Sure there was a 10-year in the US this week. Maybe that's why it passed me by. How are they responding? 30-minute chart here, so not seeing too much. Pretty meek. We're kind of range bound, right? So there's not... One of the theories going into this week was that given everything that's going on in South America, maybe there's not going to be much South American buying of bonds. Not that they're big buyers. But given the Greenland problem, maybe a few European investors might be thinking, hey, I'm not going to lend money to the US government either.
No.
And obviously China aren't interested, Russia can't. The BRICS, India have had a few problems with the US. So maybe there's a bit of wealth around the world that perhaps a bit disinterested in US bonds. It hasn't reacted terribly this week at all. So yeah, smack bang where we were, not the fallout that was potentially around when we were staring at this at the beginning of the week.
Right. Okay, well, I think we've summed it up for the week. Are you happy that you've covered everything?
Well, never cover everything, but yeah, good to get the wheels turning at the start of a new year. And yeah, hopefully you found that helpful. See where we get to, but yeah, look for turns for next week. And yeah, we'll be back. We try and do this on Thursdays.
I don't know. We'll work it out.
We'll keep you guessing.
We will work it out. We'll get a new day because it used to be Mondays. But let's see, and then we'll try and keep it constant.
I'll wait to be summoned.
All right then. Well, thank you very much, Chris, for your time today.
Thank you. Thanks for joining us.
Thank you very much, and trade safe.